Markets falling apart at the end of the day today with the S&P down 2.24%, closing at 5275.70. We've been highlighting the gamma exposure between 5200 and the 5400 level as the concentration of the negative gamma exposure that we've been watching here on the downside. The options chain is still skewed to the downside. We're still in negative GEX territory, and today's candle came right down into this zone. We're looking at the daily candlestick chart here, and I've got the whole moving average. This is the 20-period whole moving average, which is sitting at 5206. That also corresponds with that 5200 strike, which is at the top of our lower dealer cluster zone. So there's a lot of support at this 5200 level. You can see we came down just below 5225 and bounced here at the end of the day. So obviously, if we look back over the last week and a half or so, this area between 5200 and 5225 is extremely important for the S&P. I think a break below this zone and the market is at higher risk of retesting those lows. This is an area we've been watching now for a while, and that could be a potential move down, to 4,800 or even below. There was a lot of news causing the sell-off today, and everybody's favorite Fed chair, Powell, throwing some spice into the tariff mix, saying that tariffs could pose a challenge for the Fed between controlling inflation and boosting growth. So that obviously didn't help markets today. But interestingly, when we look at the volume on the S&P 500 options chain, the largest volume came in at the 5,400 strike, over 150,000 contracts. So that could be potentially market participants making speculative bets to the upside at that 5,400 level for a potential bounce. So that's something we're also going to be watching closely tomorrow morning. Tomorrow is OPEX. The markets are closed Friday for the Good Friday holiday here in the US. And so I think tomorrow is going to be an extremely busy day ahead of a 3-day weekend.
Thanks, Anthony. Let's look at the VIX. We have really high volume at 30 today, which makes sense. And we also have high volume at the 42 strike. This morning, pre-market was the VIX monthly option expiry. So that cleared the deck for a lot of the hedges that participants had placed on the VIX. Let's take a look at DIA, which I haven't covered in a few days. DIA has really large GEX at 400. It'll be interesting to see how this picture shifts as well after OPEX this week. We do see negative GEX, but we don't see a lot of negative GEX once we get below about the 380 to 385 area. And really, the biggest strike besides the 400 strike is at 425. So it is negative, but as long as we're above the hull, and we came close to it today, basically another 1.5% down, and it will be there. And the hull is rising too, so it may not even be that much. But I'm still looking at a potential buy the dip scenario in the short term with DIA. We'll see how the GEX picture shifts after tomorrow and if we still see these higher targets afterward.
Yeah, Sean, DIA definitely looking a little bit better than the Qs. The Qs were down 3.02% today, closing at 444.18. Looking at the gamma exposure data here on our graph, the 420 strike is actually the largest negative net gamma exposure concentration, suggesting that market participants believe there is more downside to come. This is a little bit different than what we're seeing in DIA and the S&P like we talked about earlier. On the Qs, we're seeing more of a negative skew pointing to further downside. And this is one of the reasons that we like to look at the differences between the major indices and index ETFs that we track, because by looking at the various gamma exposure data sets across the market, we can get a better picture for how market participants are positioned overall. On the Qs, however, there is some support here at this 440 level. We see the 20-period whole moving average sitting at 440.33, and we've also got prior support and resistance at the 440 level. So similar to the S&P 500, we are at a precarious spot, 5,200 on the S&P and this 440 on the Qs.
All right, guys, let's take a look at an idea that might have some downside potential in the near term. It's also a stock that currently people love to hate, United Healthcare, UNH. The price action itself has been quite bullish, but 3 days ago, it completed a test of the upper dealer cluster zone at 600, and it's since been consolidating, but because of the magnitude and steepness of this move, the whole moving average has followed it up and is now actually over the current price, with the whole being at 594 and today's close at 585 and change. We are at a extreme positive GEX position, as you can see here, looking at our GEX intensity gauge. And that implies that the market is very one-sided in their positioning with that stock, and sometimes that can precede contrarian moves in the opposite direction. I definitely wouldn't want to hold on to a short with this name for a long period of time, but I think it's realistic that we revisit some of these lower strikes, maybe 570 or even all the way down to 550. So this might be one to keep an eye on as a potential pullback opportunity.
Thanks, Sean. Next, let's take a look at Nvidia. Nvidia down 6.87% today, closing at 104.49. Despite the big down day, we did see a bounce as the price approached this big gamma exposure concentration at the 100 strike. We also saw big volume, nearly 500,000 contracts traded at that 100 strike. Obviously, the bounce was partially a result of a lot of put buyers closing out their puts as price approached that at the money strike at 100, and the bounce did extend into the close. One interesting note is that heading into OPEX, we don't see any large negative gamma exposure concentrations below the 100 strike. We've previously found support on every dip below 100 over the last couple of weeks. Coming over to our 3D surface model, we see the 105 and 100 strikes have large negative gamma exposure concentrated in the April 17th expiration. So that's the monthly OPEX for April. That's going to be rolling off. And when we come over here to the May expiration, we do see additional negative gamma exposure concentrated at this 100 strike. So there's still some negativity coming out into the May options expiration here in the options market. We're not seeing a whole lot of positive gamma exposure. We do see a little bit here sitting at the 125 strike. So it is possible that we could have a bounce over the next month, which for Nvidia would just barely be breaking above the big downtrend that we've seen over the last couple of months. We currently don't have a position in Nvidia in our portfolio. However, this is a name that we're going to be looking at potentially selling some premium in once we get past this April OPEX. By the way, you can follow along in our portfolio with all the moves we're making and see all of our trades in real time by heading over to geeksoffinance.com. You can sign up and become a member. I'll put a link down in the description below.
All right, my last one of the day is Hershey, HSY. And what caught my attention, we do have overall positive total GEX. And the biggest strike after this 165 rolls off is currently 185 at May 16. And we take a look, basically this 165 is right at the whole moving average. And you can see the big 185 GEX cluster also matching with our upper dealer cluster zone. But that's pretty nice upside from this 165 area if it can make it there by that May 16 expiration. Market participants certainly don't seem interested in speculating at lower strikes. I mean, all the volume today was higher. You can see this light blue line is the volume. It's a defensive stock. You can see it hasn't necessarily been going up like a rocket ship or anything, but it's been consolidating sideways during a period of difficult market performance. So it's at least a good diversifier if you have, a stock that is more correlated to the broader indices.
And guys, if you want access to our gamma exposure dashboard, our algorithmic trading strategies, our option flow analytics, as well as being able to track our portfolio and all the trades we're making, head on over to geeksoffinance.com. We are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code Easter2025 at checkout. We've got a few spots remaining, so take advantage of that while you can. Members also get access to our premium channels in our Discord community. I'll put a link down in the description below. You can check that out for free. Thanks so much everybody for watching, and we'll see you guys in the next video.